All right, guys, we are having a little bit of a technical issue here this morning. Let's see if somebody joins me here, if we have any sound. Go. All right. I think we got it sorted out here. Okay, we had a little bit of a false start there. Some of you have made it over here. I'm going to go through a little bit of a recap of what I started with, and then we'll jump into things. So what we're doing now going forward is we're going to start doing these weekly shows as private videos. So yeah, I didn't change any settings. I just restarted it. Some issue with StreamYard. So we're going to do this as a private show going forward. That's what premium members paid for, was to get in on these presentations as an exclusive. I've had to sort of get used to what technologies and what platforms are working for us. So YouTube seems to be the best platform. It hooks in with StreamYard, which I'm already fully set up with. And there is a way to make things private. So what I need everybody to do is to send me your email addresses, either by email, just reply to the newsletter, in the Discord chat, DM me, or DM me on Twitter. So one of those three methods. Just send me your email address and bug me again if I somehow miss it. But I want to get everybody into the YouTube subscribership, and that will allow us to do these as private videos. Because this is a public video and some people who are subscribed to my channel might end up watching it, I am holding back on one or two little stealth IPOs that may be coming up this week. I'm going to send those out in the newsletter, which I believe will go out tomorrow morning. There's just a lot I got to cover. So I'll try to get it out tonight. It should go out tomorrow morning, but please read it before the market open, because there might be something interesting coming as early as tomorrow. I'm going to get more information on it tonight. And if I can't get the newsletter out tonight, I will at least send, and I hear that this other stealth is going live possibly tomorrow, I will get out a newsletter tonight, even if it's just a single ticker newsletter. So pay attention to that. We've had a lot of success with the stealth runs recently, and I'm looking forward to continuing those opportunities. Let's look back at last week, because what we saw in both the IPOs and the recent IPO runners from last week is that all of these were at one point stealth plays. One was the stealth IPO from last week. The other was the stealth IPO from the week before. And one was a really good example of what I like to call the LPX play, the lockup expiration play from 180 days ago. It came almost on clockwork. We actually had it as the lead LPX play from last Monday's preview newsletter that goes out to the premium subscribers. We called this one out, and on Friday they dropped PR. Surprise, surprise. Coincidence? I don't think so. So let's take a look at what these did. So the first one is Virax, Virax Biolabs. We called this out as a stealth play. It was a $5 IPO that debuted at 20. I looked at it and was watching the debut, and there's a sell side imbalance that always makes me a little nervous. I don't want to buy on the. It was very low volume, so I'm looking for a reversal there. I chose to try to get in at 18.05, thinking, okay, well, they'll sell it down into a halt. The halt will be at 18. 10% drop from 20 is 18. I'll get in right before the halt, and then it'll reverse. But it didn't get that far. It only got as far as 19. So in the future, I may try to ladder in my trades, meaning setting an order at, say, 1950, 1905, 1855, 1805, kind of graduating them on the way down, so I'm getting more as it drops. And that way I'm not completely left out if it doesn't get down as far as I thought it would. You certainly don't want to try this on one that starts out at, say, 35 or 40. There may be no bounce. It may just crash and crash. But this one looked like a pretty reliable rebound based on low volume, and just didn't catch it. It rebounded back up to 26, I believe. Kind of fell out for the rest of the day. I was able to get in here towards the end of the day. I started kind of building a position into the close, which then gave me, let me see, where's my chart here? Okay, I got ahead of myself. So this was Vrax. Virax on the 1 minutes. On day two, we got a nice little open here back up at 20. So if you got in here, when I see this kind of trail out into day one on these low floats, when there's not a lot of volume that's been traded on the day, I kind of like getting in right at the close here, or into the close, start kind of like slowly building, not a big position. I missed this opportunity to sell because I was out dealing with stuff, but was given a second chance here on this halt. So 1640 to 19. It's not a huge win, but it's something. Added a little bit more. I didn't get here. I did get in here right around 10, 10, 11. I think this one still has room to go. Where is it right now? Okay, it's come back up a bit. It's back at 12. It still hasn't had like a major ripping run. And we've seen a lot of these kind of do this recently. We look at top back at, on day one. It dropped on day one, dropped on day two, kind of consolidated right here, and then ran from 14, 15 up to 50. No, I don't think I can hold all that time. There's just too much risk. I mean, if you had held up to here and kept holding, you're kind of feeling dumb when it drops down to 15. Then it goes to 50, so who knows? Another one that we looked at, JCSE. It started off at 14. Actually played this off the debut. Took a little profit here. I think I got 14 to about 21 or something. Then dropped off. Dropped hard. I mean, this is what a rug pull looks like on these. 5 million shares sold off down to $3. We often think that they're just dead at this point, but no, we've seen these ride back up. Used to be that with like W&W, TIRX, so CPOP, some of the original stealth plays, we saw them like just go crazy. I mean, they just went from, on day one, they'd open at say 14 or 15, run up to like 40 at the end of day one, and then run to like 70 on day two. We haven't seen that these manipulated IPO debuts haven't been played that way recently. We've seen often kind of a delayed run on these. If we look at another one, GSUN, we see kind of the similar thing. It did get, a debut premium, popped on day two, climbed a little bit, sold off a little bit. Now it's, up to, double from where it was, 2 weeks ago. So, or 3 weeks ago. Another one that we saw, and this is also on the list to look at from last week, was HKD. This was a stealth play. We called it out. We played it on day one. It ran further on day two, and we're going, oh my gosh, it went from 13. It opened at 13, and it went up to 29. Oh, and even 33. Well, guess what, folks? It's sold off for 2 days. But look, the volume is not huge. We're talking 300, 400,000 shares. This is a 16 million share float, so we know there's still, there's still a lot of shares that they're going to be trying to get rid of, that they're going to be trying to move. If we believe in the money laundering theory of these plays. What happened? Well, on Friday, it went from 1971 to 70. I mean, that's insane. There's no real explanation except that, hey, these are stealth IPOs, and while the volume is still way below the float, the total volume traded, these are still in play. There's still a lot of shares being moved around, and so I think Virax still might have some room to move. I said the same thing about NA. NA, today we got the pop. I had actually bought in a little bit early. I got in at the end of day two at 9, thinking, okay, well, it was like 1150 IPO, played it for 13 IPO, I forget, something like that. And it traded down. I wanted to add more here. It's just spread out into too many other things. I was calling it out, and then what happened? Okay, well, I held. Today, it gave me my out. It's hit as high as 1244. Once it hit 1050, I was in at 9. I took my profits. Okay, great. When I don't get, if I'm in here and I end up bag holding just because I believe, wait, we still haven't seen the move on this one. I'm not trying to get greedy. I'm not trying to like get all the way up to the top of this one. I'm just trying to make some money. And that's what I do. I take profits when they're on the table. Rule number 1, take profits without regret. Rule number 2, don't chase. And unofficially, but under consideration, is rule number 3, which is escaping my mind right now. It's not. I haven't carved it into the stone the stone tablets yet. So we're working on rule number 3. But let's move on. So what we have here is, all right. So we covered these. TKLF, that's the next one I wanted to look at. So I called this one out in last week's preview newsletter. I said, okay, what are the LPX plays? What are the lockups expirations that are coming up? TKLF, that's a great one because it was a stealth IPO to begin with. Priced it, I want to say 9. Might have been lower than that. Might have been a $4 IPO. Opened at 40, hit 43, and pretty much just dropped off. Day 5 was the sell-off. Rule number 3. Yeah. Go back to 2 and 3. No, rule number 3 is don't take big losses, which makes more sense when it's in the context of there's 5 outcomes for any trade: break even, small win, small loss, big loss. Avoid the big loss, and over time you will do well in this market. So it's not as clean and cut as the first rules, but it's I'm working on it. I got to work on that one, but I think there's something in there. Don't take big losses. Sounds obvious, but it's the big losses that hurt them, that destroy your trading. Anyway, TKLF, we called it out on Monday. Monday was the 18th. This was trading down at $1.50, and we said, okay, this is one's on watch because this week it goes into LPX. Now there's no rule. It's not like on the lockup expiration they're like, okay, today's the day. No, what it is now all the insiders are free to sell their shares, so they're all sitting there going, or the theory is that they're ready to make something move here. If they've been sitting on a big announcement, they came out with Friday, okay, we're going to acquire this company for $2 million or something, nothing huge. But that was enough to spike the low float, share on this. 73 million shares all of a sudden traded, and it went from a close the day before of $1.57 to a high of $2.78. That's a pretty nice win if you accumulated during the week here, or if you saw this coming ahead of time and said, hey, $1.10, $1.20, those are great. That's a great area to accumulate. You also can take take profits when you get little spikes, when you get little move ups. There's nothing wrong with taking 10 or 15%. Okay, so you miss, the 45% move, but that's going to happen. Sometimes you're going to be sitting these when they do pop. Sometimes you're already going to have taken profits on the way up. As long as you're taking profits in this game, you're doing good. You're doing great. Don't take big losses. Keep stacking up those profits. Live to fight another day. Exactly. Thank you, Harry. So TKLF, great example of an LPX play that we called out the week before, and it ran the next day or the next week. So it doesn't always happen that fast. Sometimes you end up holding them longer. It doesn't always happen. There's no rule that it has to happen, but we do see these consistently enough that it's a play I like to do. There's 2 approaches to it. One is to accumulate. The other is to wait until, I'll just show you this real quick, because this is one way to play it, is to try to accumulate down at what you think is a bottom zone. $1.20 to $1.30. Really like $1 to $1.20 is pretty ideal when I'm really watching these and able to sit on them. That's where I'm kind of like, okay, the downside on this is very low to me compared to the upside. One that I'm watching right now in that zone is HILS. They did have a kind of a little pop recently, but I'm around $1 adding that one and holding it. And if we get a walk up to $1.20, I'll probably take out. I did this with BJDX a whole bunch of times, just kept buying it at $1.05, $1.10. Every time it run to $1.20, $1.25, I'm setting a stop loss and getting stopped out most of the time. And just keep doing that. Keeps adding up those 15% wins, and you'll do pretty well over time. Let me show you this one on the 1 minute, because there's another way to play this that doesn't tie up your funds. One of the downsides to that approach, I find, is that you end up kind of getting spread out on a whole bunch of plays and hoping, that one comes in. Another way to do it is to already understand what's coming up or what's in kind of the batter's box on these, and then sit at your computer every day from 7 a.m. or 6:55 a.m. to, in the morning hour, the pre-market starting at around 7. They tend to drop these on the hour. So this was 8 o'clock. They dropped the PR that they had, acquired this company. You get an immediate spike. And what I'm looking for is an immediate spike, a name that I recognize as being a recent low float that's, in the LPX zone, period. And then I wait for I usually say about 5 minutes. So 5 minutes, some of these it's 3 to 5 minutes, some of them it's 3 to 8 minutes, but there's a period in here where you can try to pull off, say, and even if you get in on the spike, it's not terrible if you're end up being right. But I like to give it a little bit of a pullback, accumulate for a few minutes, and then sit back and let it ride. There's nothing wrong with taking profits right here at 230. A lot of times we'll see there's different chart patterns that we see. If I see a second hard spike up, I'm probably going to take profits right there. More gradual like this, I might let it, run to here. I tried to get in right here. It was about 5 seconds late to get in on this pop. I wasn't watching my desk at this point. But if I had been and I had seen this headline, I would have known to get in. This is exactly the kind of play that I look for. Recent low float IPOs that are in their LPX zone, when they drop PR, especially if they've never really had a big spike before, that's a great play. There was a little bit of a hint on this one. If you look back on the 18th, it was trading incredibly sparsely, and then someone bought up 66,000 shares. That to me is a little bit of, when I, looking back at it, that was kind of like, that's a pretty big volume spike right there on the day that it goes into LPX. Coincidence? I don't think so. So now let's move ahead towards the IPOs for this week. First one is Jay-Z. It's not scheduled yet. It is on several calendars for being on the schedule for this week. And I like it as a stealth IPO. There's some others that are trying to be even more stealthy and sneak on there. I'll cover those in the newsletter that I send out tonight, or get an email out to cover those. But this one definitely has stealth written all over it. It is a Chinese online education company with not all that impressive financial numbers. It's filed its F1 originally back in July 2021. China put in some rules around education companies, basically saying, we don't want private education to be for profit. We don't want the rich getting richer. They kind of, I don't know if that really matters when we're looking at stealth IPOs. We're not investing in these companies for the long-term growth potential of investment in Chinese education. What we are looking at is this a low float? Yes, 5 million shares qualifies as a low float, especially for what is, on the surface, a stealth IPO. They don't really try to go super micro float a lot of times on these. They'll just go in with 5 million shares. We saw that last week. We saw that with Virax. They just said, screw it. We're just going to go in with, Virax was 1.35 million shares. It was the week before that. We saw ILAG, which was also a stealth play. It was 5 million shares at $5. So it used to be pretty standard. 5 million shares, $4 to $5. That was the stealth IPO. And almost every single one of them ripped. I like the setup. I'm not afraid of these when they're 5 million shares. And if this debuts at any kind of premium that leaves some room for an upside, let's say if they're going to price it at 5 and it debuts, between 11 and 15, that's the ideal setup to me. When they start opening them up, recently they've been opening them up at like 19 to 25, and that to me, I don't know which way they're going to go. Maybe I'll sit and wait and try to scalp it off at, or take an entry at 18 or 19. I'd rather just miss it and not take a 20%. It's 20% upside and a 90% downside. So I don't really love the risk once it's up there. We have had enough of these that did OST, JCSC. We've had enough of them that do come in at a playable price point that I'll wait for those instead of trying to chase these up above my kind of safety zone. The financials, whatever, we've talked about this one last 2 weeks, I believe. It hasn't been postponed. It's just they put these on the they do their SEC filings, they get them ready to go live, and then they kind of sneak them on the calendar often. So that's why I cover them when I'm suspicious that they might go live, because I want to be aware of them. I want to be watching for them. I have news scanners out looking for their announcement of pricing, because historically a lot of these they've tried to kind of sneak them on the calendar without us really seeing them come live. The fact that this company has operating profit and positive cash flow is kind of interesting, I guess. More interesting is the underwriter is AMTD, we just saw their HKD subdivision just went crazy on day 4. They also did NA. NA finally ran today. It's up 80% from yesterday. So they know, and Univest is another one that's brought a bunch of stealth IPOs to market. So these are two of the usual suspects that are often behind the low float stealth IPOs. And whenever they bring something to market, I am going to be paying attention and waiting to see if I can get either allocated shares or if the debut price is something that leaves me some room to try to get in and take profits on. Okay, next one, Mobile Global Esports. This is the first time we see this one coming to market. I believe that it's still available on, it's still available on Webull. And I kind of overlooked this until I dug into it a little bit more. It's esports in India and South Asian markets. They have some exclusive contracts or distribution deals with some like university networks in India that cover over 800 campuses. And, esports was certainly a kind of hyped, buzzy theme about 18 months ago. It's now, I think, along with live streaming, everything, not all that, it's just not getting the kind of attention that it was during lockdown. Um, but it's a pretty bad looking company in terms of where they are for doing an IPO. And I kind of like that when I'm looking out for a potential stealth setup. They have basically no revenue. They spent $250,000 promoting some esports tournaments in 2021. That's about it. They have no profit. Obviously, their baseline financials are negative. What I don't not like it. I don't love it. But when I see this, it makes me go, huh, maybe they're doing something. Maybe they're going to do something weird with this one. It's going to price somewhere around $4 or $5. If they price it at $4, okay, great. If they price it below that, I'm going to be a little bit suspicious. But the float is supposed to be 1.5 million shares. However, there's 2.3 million shares that are registered for sale by selling shareholders, meaning 3.8 million share float. West Park Capital, this is not an underwriter that has done many IPOs. I don't have any reference for them. Maybe that's good. They're kind of off the radar and shady. But what this kind of looks like to me is an opportunity for insiders to hold on to their shares, park a bulk of these shares with with one investor, an anchor investor, fill out their quota requirements on Webull and get enough of us to meet the minimum quantity of shareholders they need, and then rip the debut. So it's just such a weird company. I guess that's I don't know if it's the green shoe or if it's the just if it's just what's registered by the shareholders. Sometimes, as I understood, the green shoe would be somebody coming in with an underwriter over allocation, or someone coming in and taking the anchor position. But something weird about this one. Kind of got my eyebrows cocked and thinking, like, actually, I'm gonna do it. I'm gonna put in for $100 and just see if I get like a real allocation or not. It's one of the things that I can see in a stealth IPO or any of these IPOs that rip. AERC, not really a stealth IPO, but when people who requested 100 shares got 2 shares, it was sort of the first indication that the $10 price IPO that opened at 40 and then ran to over 100 was something screwy. That was the day before Thanksgiving last year. Another example was just last week. Last week we had everybody who put in for Virax shares. I put in a request for 35 shares and got 3 shares. Other people put in requests for $1,000 worth and got 4 shares. Someone who put in for 1,000 shares got like 19 shares. So to see those tiny allocations, fractional allocations of what people are requesting on Webull, that's a pretty good sign that they weren't really bringing Webull in to fill out their order book. They're just trying to get the number of subscribers to the IPO up to the minimum NASDAQ requirements. So I put in $100 worth of request for MGAM. If I get 50 shares at $5 or whatever it is, 20 shares at $5, then I'll say, well, it's not a stealth IPO. Oh well, dump my $100 and hopefully get 50 of it back. If it is a stealth IPO, then I'll have a little bit of a tip to it, but doesn't make sense. Yeah, it's weird. I agree. Weird is good in the world of low float IPOs that are F1 filings in India. So we will see. The next one is MAIA Biotechnology, MAIA. This is 1.66 million shares, lung cancer treatment. It's pre-revenue, no gross profits, negative baseline. Underwriters Think Equity. So Think Equity, I guess I've been told that their CEO is a super rich guy because he specializes in these biotech IPOs, and 1 out of 10 of them go to the moon, and he just keeps the shares of all the what he gets, and that's enough to offset the losers that they bring to market. So that being said, these tend not to get much interest off their debut in a hot market where day traders are just hunting for the next low float IPO. These can get a pop, at some point if the debut price on this one is, say, they're pricing this, or the price range right now is $5 to $7. If they end up pricing it below range and then debuting it below that, and then it falls from there and it's at $2 at the end of day one, then I might take a little position for it to pop in, either after hours or pre-market the next day. But it's not a play that generally gets a lot of attention from day traders. It's not a setup that typically gets manipulated by insiders. And I just refer to these as biotech busts. They're almost always like Friday, low float, lung cancer treatment. This is the kind of play where maybe you hold on to it in your mental, memory bank as a possible LPX play 180 days later. They are going to file for, I think, phase 2 trial submission is supposed to happen in the next quarter, or this quarter. So maybe in 6 months they have some kind of PR about positive top line results. I don't know. But this is the kind of play where when it drops down to that $1.20, $1.10 level, I start thinking, okay, well, maybe, keep an eye on this one for an LPX move. But even then, I'd rather wait for them to have any kind of headline towards LPX, and then take a position early on in the move on that one, knowing that the shares are tiny and this, and that the IPO price is way up at $5. So bioAffinity Group, this one just gets perpetually listed. I think I've talked about it 4 or 5 times now. It's pre-revenue, has warrants, diagnostics company for early stage lung cancer, blah, blah, blah. Wallach Beth Capital, not a this is another biotech bust in my opinion. I will watch both of them. I will watch both of these just to see if we get that opportunity, the day 2 rally. But there's other plays that I'm more interested in. I've got some investigative work to do on some other stealth IPOs that I believe are possibly in the pipeline, and those are going to get my attention. And I don't want to, another point on these LPX plays, you tie up your capital. It's capital I can't use to play the IPOs that to me are a lot faster moving, a lot easier to get a quick 20-30% in 1-2 days or a week. And those, while they're working, that's what's going to be putting my attention into. An LPX play can take weeks or months even to finally pan out, or it doesn't come at all. And then you're sitting there going, oh, well, I could have used that money elsewhere. So, well, whatever. All right. Last thing I want to look at is the LPX plays that are coming up. We've got FGI Industries. I want to show you this one because this is the one I'm most interested in. This is... makes sinks and stuff, and they sell them at Home Depot and everything. It made some pretty interesting moves. Nothing super stealthy. Opened at 5, kind of trailed off for the first 3 or 4 days, and then it got a pop on this is usually the underwriter overall allotment fully realized, and then it gets run. I don't quite understand that play. We have seen it from time to time run. So from $3 to $6.25, that's not a bad play if you took it. But we haven't seen any real. We had a 90-day? It started on January 25th. Or was that a 60-day? So 60-day LPX, a little bit of a push there. Sold off a bit from there. So the baseline down here is at like $2. We're at LPX on this one on July 25th, so at the end of the week, which is kind of like TKLF. We started watching it on a Monday. Might have liked to have looked 2 weeks out on it and gotten in around 215, 220, but so be it. Didn't really want to have my fun. I'm happier with the other plays I've made in the last week than having it just sit there to pick up. And it's not bad, 20, 25 cents, 30 cents. But we do have is, this starting to kind of creep up. We do see this quite a bit when they start to creep up here. We can bring the, let's take a look at this. No, not the grid. I want to look at it like this. So let's look at TKLF. TKLF started to kind of walk up a bit, going into LPX. Here, we've got this kind of walking up a bit. So it's just an idea. Keep an eye on FGI. If one of these mornings I'm able to be at my desk before the market opens, I think I'll be able to this week. It's just been pretty hectic the last few weeks. If I see a headline, FGI, almost anything, share buyback program, acquisition, expands distribution to more Home Depot stores, lists on Amazon. I mean, these are very fluffy headlines that we then get, boom, okay, back up to $3 or $4 from 240, 250. So if I can catch that first move right on the headline, take it for 50 cents or $1, and you're pretty happy with that one. FGI, it's in its 7th month. I believe that might be true, but the lockup period is listed as, so this is January, February, March, April, May, June, July 25th would be the 6th month, I believe. No? All right. Harry, check that while we look up the next one. Credo. I want to talk about this one because this is, people are like, oh, I thought lockup periods are when you don't want to buy because there's added liquidity when insiders are selling. Well, yeah, for mainstream IPOs, that is the general rule. So Credo was a mainstream IPO. It's some kind of chip manufacturer. When it was a weak market, pretty brave IPO in the first place. But it came live and it's kind of been up and down. Okay, it jumped a bit on earnings, but as a mainstream IPO goes into lockup, people tend to kind of start getting out of it ahead of that, anticipating dilution to create more liquidity for the downside. And then they start, a few days after that lockup, they'll start to buy. So a lot of kind of long-term investors won't even touch an IPO until those LPX moves have been completed. And that's just something I wanted to point out there, that LPX is counterintuitive in terms of the low float IPOs. You're thinking, well, if the double the float is now going to be traded, wouldn't that make it, isn't that dilution that would bring the price down? Yes, of course. From a fundamental supply and demand point of view, that's how it would work. But that's not what that's not our hypothesis as to why the headlines happen to drop right before these or going into or shortly after. And what we're trying to do is catch those. We're anticipating that they're going to do something that they've been even planning it from before the IPO. What are we going to drop? What headlines do we have? Can we acquire somebody? Do we have an acquisition? We can just kind of sandbag it a little bit until, not sign it until after the LPX. Do we have a merger? I mean, the classic one is board announces authorization of a share buyback program. Doesn't mean they even have to buy back any shares. It just means that the board said, well, yeah, I mean, you can. Great example on that one was HTCR. That one dropped down to, where'd that one drop? So that's HTCR. That one we got to right here, which was right at about we had, why can't I see the date here? Okay, February. Then we had March, April, May, June. So we had like a 120-day LPX, I believe. And then, or maybe it was on the 90 and they just waited for 30 days. The board said we could buy back $3.5 million worth of stock. We don't know if they actually bought anything, but it set the price from $1.05 or $1.02 up to $3.20 the next day. And then it climbed a bit higher, that was the high. This one does have a lot of stock owned by the CEO that becomes, the lockup period is August 9th, I believe. So that's the next one I'm looking for on this one. It looks like they've kind of held the share price up here, the $2.80 to $3. They won't let it go over $3. They kind of save it every time it gets down to about $2.60. So this one looks to me like it's poised for a run at the 180-day lockup. FGI lockup ends today. Okay. Isn't that, is that what I said? FGI 25th? No. Oh yeah, today's the 25th. Sorry. So yeah, that's the 25th this week. That's why TKLF was the 18th and it ran on the 23rd. So that's what I'm looking at there. Nightscope is another one, and then we'll wrap up for the day. Kscp. This was an interesting IPO because it was promoted heavily on YouTube videos, and a lot. I mean, they pretty much just retail, sold this to retail, fed this to retail, and on day one, it opened at 14 after I think the IPO price was 10. Opened at 14 and dropped hard. I mean, it just fell off a cliff through some halts. Closed the day at like 6. And then the next day it ran to 16. And then the next day it ran to 27. So something was weird about this one. I don't know what it was. But it like might have been the underwriter over allocation. But it has fallen hard since then and keeps making new lows. I think today it's making new lows again. So it's at 2.6. They had a few little pops in here, contracts with security centers, malls. But if it's going into LPX, it's on watch. And if we get a headline, I'm looking for if I can get in early enough. So July 26th, that's tomorrow. Watch it throughout the week. These are just ideas, guys. Make your own strategy. If you want to you want to spread out your money in these, go get a list of all the LPX plays, all the recent IPOs. I'm going to put something together on the website to try to help with that, but that's going to be a little while till I can put that all together. And in the meantime, watch the show, get the newsletter. I call these out. Most of you guys who are here right now are already getting that information. For those of you who are premium members, please be sure to get me your email address, your Google account email, so I can add you to the subscriber list here for the private videos going forward. The live trading will be, reserved just for private viewers. The weekly previews are going to be just for private viewers, and that's most of the video content that I do. And also, if you're not already in the Discord group, go ahead and join it. There's a free chat there where we're trading every day, and like there's some guys who really know their stuff here. It's helping my trading. I hope I'm helping other people. We're kind of working together, calling things out, and getting in and out of positions and taking profits. So okay, let's take a minute. I've still got a couple minutes before I got to go run and pick up my daughter from school. MTech just keeps grinding out these like $200,000-$300,000 contracts, and pops have just been less and less. I mean, the last, we got a good one here, but it was from the day before at $1.10 to $2.10. I mean, okay. I mean, we're being pretty picky when we're complaining about 80% moves or whatever that is, 70% moves. But here's another one. We had a run from $1.10, took a week and a half, but it peaked out at $1.60. So I got to get better software for checking out the volume profiles in the middle of signing up for Thinkorswim. And I'm sure if you look at the volume profile that there's a lot of volume being held right in here because it just can't break that. And it's got just couldn't take off now. It's not one of these. It was never really it wasn't a stealth IPO to begin with. It's like maybe actually a decent company. They keep racking up the contracts. They make technology that's used in drone video analysis, and that's probably something that the world is going to need more of as long as Russia and NATO and Ukraine keep fighting with each other. So MTech I've played a bunch of times. I got the IPO off the opening dip to rip, or dip to rip. Then I think we caught the day 2 as well. I've played this a couple times, catching here I caught the early PR in the morning. I wrote it for a win. And this is one of those plays where you don't want to, it's interesting because yes, this is a low float IPO entering towards its LPX. So you think, okay, well then they drop headlines. I'm going to buy it on the headline. But today what we saw was not really an opportunity. I mean, by the time the headline dropped, it was 9 o'clock. it popped. If you bought here, now you're bag holding through the open, and maybe you're still bag holding. So recognize, and this is one of those things that comes from looking left, looking back, but also having tracked this and seeing, okay, well, what was the PR here? Oh, it was that they've signed another $200,000 contract. Well, they've done that 4 or 5 times now, and each time it's been less and less. So I held off on this one. I thought about taking a play right here on the open, because when it drops, when it spikes on news, it's low volume, and it drops down to where it closed the day before without the news. There's a good chance for it to run. Not a whole lot of stuff here. I was in some other stuff. We've been talking a lot about SPAC, the D-SPAC moves recently. And we have a few people in our Discord in the free channel that are really nailing it on here. And they got me into this one on 10? And yeah, I was back here on Friday. I got in here at around 10. Just hanging out, waiting for it. And then Friday night, I tuned out and went and spent time with my family, turned all my stuff off. Before I went to bed, I checked, and it had already spiked. And damn it, okay. Well, now I'm going to wait. And but knowing that it already spiked and that I really don't want to turn in, these SPACs can easily turn into $2, $3 stocks or $6 stocks just as fast as they spiked up. So I'm very happy to take 20-30% profits. Waited for my opportunity. I couldn't sell until 7 o'clock because I got it in the E-Trade account. By the time 7 o'clock rolled around, for $1.33 profit on, I think the spread wasn't even really at a point where I could sell out very easily. I just kind of said, all right, well, I'm going to see what it does on open. And if I get any kind of run, I'm going to take profit. So as soon as it started moving up on the open, I put in a stop loss and I got out at 13 something. So profit, money, take it to the next trade. MGAM, Esports company similar to FaZe. Maybe FaZe sees continuation tomorrow. FaZe, I just feel like it's I don't think people care that it's a esports company. I think people are just playing SPACs. And FaZe has maybe a bit of meme potential just because it's kind of cool. And, I guess there's gamers, might be the same kind of guys or guys and girls that trade these sorts of stocks. But at 13, I want to be in these before they really move. Trying to catch them after they've already moved, to me, is a very dangerous setup. So maybe this goes to 25, maybe it goes to 5. I don't know. But buying in at 10 when all SPACs seem to be getting their day in the sun around the D-SPAC, that to me is a cool risk reward ratio. At this point, I don't know. It's guesswork. So anyway, guys, that wraps up for today. I will get the newsletter out, and there will be some more interesting stuff in there. So if you are not a premium member yet and you somehow got wind of this broadcast, go ahead and upgrade to premium membership. If you are a premium member, watch your inbox. I will be sending stuff out tonight. It will be probably around 8 or 9 East Coast time. So you might have to stay up a little bit late or get up early and check your inbox. But there will be some juicy nuggets of information that are not for sure even going to be scheduled this week. But if they do, you're going to want to be aware of them. So thanks for tuning in, guys and girls. And, I'd say hit the like button and subscribe and all that stuff. But you're all either subscribed and not really trying to promote these out the group. So I'm just going to say goodbye. Good luck. Cheers. Bye-bye.